Alright, you guys, so without overcomplicating this video, I'm going to get rid of one of my strategies here. If you're not familiar with the channel here, I have been trading two strategies here, one of them being the elephant bar strategy here, which I started on January 4th, so it's probably been like 6 months since I've been trading this, probably taken about 40 to 60 trades by now. And I actually remember telling you guys that if this strategy was profitable, I was going to fund the real live account here and start trading it for you guys. But unfortunately, one of the biggest reasons why I'm going to let go of this strategy here, the older one, is because it hasn't really produced much. Again, I've taken 40 to 60 trades by now using this strategy here, and there's a couple of things wrong with it, many things actually, but the main one, the obvious one, being that it hasn't resulted in any profit. So I've just been breaking even, some cases making 1 or 2%, other cases losing like 2 or 3%. Last month actually resulted in a 3 trade progression here. So I only took 3 trades last month, which was in the month of August, and it resulted in a negative 1.5%, give or take, on my account here. So that's another reason that there isn't much opportunity here. So I only took 3 trades in that month, the last month of August. Sorry, I think I keep saying August, but on the month of July. So this is the month of July here, which only resulted in a 3 trade activity and resulted in a negative roughly 5% of my account here lost. So I used to preach that I overtrade, and I used to say that minimizing your trades is pretty good, but 3 trades a month, that's definitely a little too low right here. But even looking at the at previous months here, I've just been breaking even consistently pretty much. By no means is that bad. I mean, definitely breaking even is good, especially considering the modern trader here, which blows up accounts on a daily basis. Breaking even is definitely good, but I'm looking to make some profit, and hence this newer strategy that just arose out of my mind a couple of weeks ago. So 2 weeks ago, July 9th, we started this brand new strategy here called the trending strategy. Pretty simple name, but don't let that fool you. So I'm going to make a comparison with this strategy here to the older strategy here to kind of explain to you guys the reason why I'm going to get rid of this older one, this strategy here, to pretty much focus on this newer one here. Yeah, so I want to explain to you guys the process of the newer strategy here that I take, and really explain to you guys the depth that this newer strategy has compared to the older one. So I use Grok. You could use ChatGPT to pretty much get a trading plan. But just to give you guys a quick rundown of the complexity to this newer strategy here. So it's not too complicated, especially when you're using AI to give you the whole management plan. It's not too complicated, but it is a little more complicated compared to the older one. So first things first, I give this chatbot 4 things. Number 1 being the account size. So in this particular day, my account size was 4,834. Number 2 is I give it the open and the close of the current day's candle. So let's bring up a chart real quick just to give you guys an example here. So I took this trade, I think it was on this day here. So every candle represents 1 day worth of time. And I think we took this trade on this green candle right here. So this was a reversal candle here right after a pullback, which is good. This is exactly the criteria that I'm looking for. We pulled back kind of to the moving averages here, the 20 moving average, simple moving average, and then we got this reversal bar. So that's what we're looking for here. But again, you give it the open. So the open on this candle was, I don't know, let's see, 48.44. The close was 48.78. You give it those 2 numbers. Again, we're talking about the chat bar here. And then you give it the ATR. So the ATR is pretty easy to find. You could just, let's just use this one for example, any stock here. You come here. We're using Finviz, by the way. This is a website, free website that you can find on the internet here. And you come down here, you look for the ATR, and in this case, it is 2.10. So this simply just means that the average true range, the potential move of this stock here is 2.10. So that's the average true range right there. So you give those 4 numbers. I'm gonna recap those 4 numbers real quick just to refresh your memory. But the account size, number 1, you give it your account size, the open and the close of the current candle of the entry, which is the reversal bar in my case. And then you give the ATR. So with those, actually, that might have been 3 things right there, but the open and the close might be 2 things. But that's 4 things right there that you give it. And then it just gives you automatically the whole trading plan, everything that you need to know, which I'm gonna break down a little bit just to explain to you guys again the complexity of this strategy, the depth of this strategy, and then compare it to the older strategy, or so you could just see the reason why I'm gonna leave the older strategy and use this one right here, which isn't even that complicated, to be honest with you guys. But look, take a look at this. So you have the initial trade setup here. Stop loss, it gives you the stop loss 46.54. The risk per share 2.38, nothing too complicated. Share size, so this is the amount of shares you want to be buying initially. Dollar risk, we're only risking 1% on every trade. The initial target, so this is where it gets a little bit complicated. The target is 2.2 times your ATR. So In this case here, let's say the ATR was 2.14. You simply multiply that by 2. And whatever number you get, you add it. So the current price is 17. Let's say the ATR was $4. You add 17 plus $4, which will be what? 17, 18, 19, 20, 21. So the target would be $21 roughly around right here. And that's it. You have your target right there. Times 2 ATR. You only sell half at that point. But here's where it gets complicated again. We get to add. We get an adding scenario. So that's something that the other strategy does not have. I don't have any scenario where I add, but the trigger would be in this case that we add at 0.75 ATR. So going back to this example here, this is just an example, random stock here, by the way. But if you multiply 0.75 to this right here, whatever number you get, you add to the 17, or you really add it to the entry price. So if let's say we entered at 17.70, which is the current price right now, you would just simply multiply that or add whatever you got from this multiplication of 0.75. I don't know if this is making much sense to you guys, but hopefully it is. And guess what? You only add 10 shares. And in the second scenario, which is similar, but instead of the 0.75 ATR, it is actually 1.5 ATR. So this will be the second adding scenario. And you'll only add 5 shares. So we're halving it every time. So the initial share size is 20, second share size is 10, and then the final one is 5 shares. And then at this point, and I kind of forgot to mention, but you're moving up your stop loss. Meanwhile, you're doing all these things. So the first adding scenario, you add your stop loss to break even, which is 48.92, which just happened to be the entry of the trade here, 48.92. So you move up your stop loss to break even during the first scenario, and in the second scenario, if it gets to that point, you'll add your final shares, and then you move up your stop loss to 50.71, which is the trigger of the first adding scenario here. Now, I'm going to give you guys a live example here that I'm currently in right now, which is NRIX, just to explain to you guys a little bit more in depth what that looks like. NRIX, you can see here we have 63 shares. We actually just added to this trade here, which the entry was right here, a beautiful reversal hammer candle, maybe even a dragonfly candle here that formed right after hitting the moving average right here. So we took this trade at the close of this candle. 2 days later, we actually hit our first adding point, which is right here. But it is just hidden because I have a red line here, which was my stop loss, but we moved it up. But going through the scenario step by step, we jumped in right here, hit our first stop loss. We moved up our stop loss to break even. We just went sideways pretty much for many days. We've been holding this trade for probably 15 days now, and not much was happening until today. We actually added for the second time right here, and then we officially moved up our stop loss to the first adding level, which is right here. So at this point, since my position is at 23.14, there's absolutely no way that we'll lose money on this trade here unless bad news comes out or whatever, and then shit hits the fan. We just gap down and then we get stopped out here, but that's not likely. So worst scenario is that we get to profit a couple of dollars, maybe $20, $30 here on this trade. Best scenario, we get to hit our target, which is actually closer and more likely to happen than for this thing to pull back all the way to this red line. But yeah, that's the rough rundown of this strategy here. We're looking for a pullback and then getting a reversal bar. We're trending. We're buying stocks that are in a super good uptrend right here, like this one right here, as well as OII, which is another one that we're holding right now, a more recent one, nice little uptrend. And TXG just happened to be one of the most profitable trades that we took. Nice reversal hammer candle that formed here. And it doesn't have to be a hammer candle. It could be a doji candle, other reversal bars, even a narrow range bar like this one right here would be good. But this trade here, right away the next day we happen to get a 15% move. So we hit our both adding scenarios, and then we actually got to take a profit. We sold 50% there, and then we trailed the rest using a trailing profit method here, which essentially required us to move up our stop loss 1/16 under every candle. And I think it was on this candle where we got stopped out. But this particular trade actually yielded us a $189 profit, which actually reached the phase 4. So that's the ideal scenario right there. We reached phase 4. Many of them, as you can see here, we're only reached or stopped out at phase 1, which is the hard stop loss. Phase 2 is I believe we move up our stop loss to break even. So you should expect these to be either small losses or small winners like this one right here, phase 2. But yeah, we're still holding 2 trades right now. So far, we've profited $41 off this one. If we were to realize these other 2 trades, we'd probably be up like, let's say 4 to 5%, which 4 to 5% in 2 weeks, that's definitely a good thing. So let's compare this strategy. I kind of got off topic right then. I apologize. Hopefully you guys are still watching this video. But going back to the older strategy here, there is absolutely nothing, no criteria, no scenario where I add to my winners. And I could add something, but to be honest, I don't want to do all that work. I prefer to just scrap this strategy here and just work on this other one that I enjoy trading more. So yeah, but there's no scenario in this description here that requires me to add to the trades here, let alone scale out. So in this case, as soon as the stock hits our target, we just sell the whole full lot right there, the full amount right there. So that there is no time, there's no scenario here that we actually get to see me adding to winners and scaling out of the trade, let alone using ATRs or all that good stuff that I think is valuable in this newer strategy here. And for those reasons, I'm going to choose to get out of this or scrap this older strategy here and just focus on one of them here. And this might be helpful for you guys as well too, for those of you guys that are in the Discord right now, which is completely for free, and I send out a watch list every day. Of course, you guys don't want to be getting filled with 2 different watch lists a day. So ideally, you would just get 1 watch list a day, which would be this one right here. Using this strategy here, that would be ideal. That way you guys could also just be focusing on one strategy, which has definitely more promise to it. And just to give us a little more insight into the strategy here, look of the complexity and depth to it, this is pretty much how I scan for these stocks using that newer strategy. I come over here to the Finviz app or website. I look at the groups and I see what's trending in the monthly performance for the sector. So in this case, energy is a top performer. So I'll simply consider this, and I won't use the weekly just because it's too short. The 3-month is too much. We're swing traders. We're not investors, nor are we day traders to be using the weekly. So the monthly, I find it to be the best. And I go on to the screeners here. I do already have a preset for my criteria here, or for the filters that I use. Go ahead and take your time and look these over. I do have a preset for shorts, but the market isn't in bull trend, or the market is currently bullish right now, so there's no reason for me to be shorting any stocks right now. The only thing that does change is the sector. Again, we already know that energy is a top performer in this month, so we're definitely just going to be clicking on this one. You could theoretically pick the second performer, but I suggest you just stick to that first top performing sector, just because there's a big difference between the energy and the financial. Financial is only up 2% as opposed to the energy, which is up 10%. So this is definitely where all the winners are at right now, and you obviously want to be trading in favor of those top performers. So I suggest you just focus on the number 1. And again, using all these presets, you'll quickly find some good stocks to be trading in the energy sector. So unfortunately, today there's only 2 stocks to be looking at, and one of them is actually one that we are currently in. So if we look at our spreadsheet here, you'll see that OII was actually one that we took a couple of days ago on the 31st. So that's the last day of the month of July. Hence why it's still on this spreadsheet here. So any new trade that I take, I'm going to build a new spreadsheet just to keep it nice and formal every month, create a new spreadsheet. But here's the last trade that we took, OII. It is still one that we're holding right now. I actually have it saved up right here. So we got 20 shares. Waiting for this thing to hit our first adding scenario. We'll add right here, this white line, move up our stop loss to break even, and then just hope for the best. So yeah, everything's pretty organized. I like the idea that we have to add to these trades, giving it more potential. For lack of a better word, there's more potential in adding to trades like this. And even letting them run, since we only scale out of this trade 50% once we hit our target. So I really like this strategy here. And yeah, going back to the scanning here, we only have 2 potential candidates here for this one right here. I like it, but I think there's still some room for it to come a little bit more down. Besides that, I really want to see a reversal candle form here. So this red candle, I don't really like jumping in on red candles. If it was a green candle, I would definitely be liking it a little bit more. But as of right now, I'm just going to skip on this day. So today is probably not the best time to be trading, especially because I already have 2 positions open. So there isn't really much reason for me to be searching for stocks. Like, for example, I could jump down to the financial sector, which is the second top performer. But again, I have 2 trades active right now. I don't really want to be desperately searching for something that I don't really need to be doing, Yeah, I'm going to leave it at that, you guys. I could explain the strategy a little bit more in depth, but I'm going to leave it at that just simply because I think this video is a little bit long. The main focus of this video is just to explain to you guys the reason why I'm going to get rid of this older strategy here. So a lot of reasons, good reasons, I think. But if you don't think that's a good if you don't think those aren't good reasons, then go ahead and let me know in the comments below. If you have any suggestions, maybe comments, concerns, whatever the case may be, drop them down below. I'll definitely be looking into them. So I currently have 2 open positions. I just added to one of them right now today, a couple of hours ago, which is NRIX, a big performer. We're up like 90 bucks right now. So yeah, we're currently holding 2 trades right now, OII, NRIX. And yeah, go ahead and check out the Discord. I have a couple of people here. I don't even know if they're paying attention, but if they are, I'm going to get rid of the elephant bar strategy. Hopefully make things simpler for you guys. Completely for free, by the way. This whole Discord is free. Go ahead and join. I send out a watch list every single day. It's not every day that I send out a watch list though. Like in these 3 days here, there just simply was nothing to trade. So, but yeah, other than that, everything's going good. The whole general market is up right now. Hopefully it continues and we get to see more profits for the upside. So I'm going to end it right there. The month of August is all wrapped up. We ended up profiting. Well, actually, we haven't realized the other 2 trades that are still active right now. So hopefully we do get to end it in a pop, maybe up like 4 or 5% return in 2 weeks. That's pretty good. So I look forward to trading July and see what that month has to offer. But for now, we'll keep things simple. We'll only trade one strategy, the trending strategy, the newer recent strategy, and I'll try to keep you guys updated on as much trades as I can as possible. So with that being said, make sure to subscribe, leave a like, a comment, and I'll see you guys in the next one. You guys stay focused.